If you owe the IRS more than $25,000, well, congratulations, because you are now in a new tier of tax debt, so to speak, new level unlocked, so to speak. Now, this is a little bit speculative. Okay, we'll admit. It's not like the IRS publishes this table of, well, here are the tiers of tax debt and how we prioritize taxpayers. 25, 50, 100, 250. There's nothing like that you're going to find. However, based on the guidance the IRS gives its own employees about how to treat taxpayers who owe more than $25,000, I don't think that's a stretch. Okay? The IRS treats taxpayers who owe more than $25,000 differently in several respects than it treats taxpayers who owe $25,000 or less. In this video, I'm going to share 8 things that happen to you when you owe the IRS more than $25,000, and hopefully you'll be convinced of that as well by the end of this video. First thing that happens to you, first thing, is that you are no longer eligible, or actually you have fewer options when it comes to installment agreements. Okay, if you owe more than $25,000, all the way up to $50,000, you're still eligible for a streamlined installment agreement. That's a no-doc installment agreement with the IRS, generally speaking. Okay. However, once you owe more than $25,000, if you want to get into one of these streamlined installment agreements with the IRS, you no longer, well, you lose payment options, basically. You must now agree to the IRS directly debiting your bank account every month on a certain day of the month in that installment agreement. Okay, it's called Direct Debit Installment Agreement, DDIA. You owe $25,000 or less, you have other options about how you're going to pay the IRS in your streamlined installment agreement. So that's one thing that happens to you once you owe the IRS more than $25,000. A second thing that happens to you if you owe the IRS more than $25,000 is you will likely have to pay them at least $350 a month in a standard installment agreement. Now, if you owe way more than $25,000, you know, $250 or $2.5 million or something like that, you're going to be paying a lot more than $350 a month in an installment agreement. Okay, but once you owe more than $25,000, the minimum you're going to be looking at is around $350, unless you can prove that payment would cause you hardship. Okay, then you could look at a partial payment installment agreement. I've covered that here on the channel. Currently non-collectible status, also known as hardship. Then you don't have to pay the IRS anything every month, right? But they will file a notice of federal tax lien against you, right? So you can't just get hardship and then go sell your house. You have all this equity and get that windfall and not pay the IRS. They will protect their interest by filing a notice of federal tax lien if you get into a hardship-based resolution like that. Offer and compromise too, right? That's, almost goes without saying. Speaking of tax liens, number 3, once you owe the IRS more than $25,000, you may be stuck with your notice of federal tax lien, even if you enter into an installment agreement with the government to pay off all your debt. This is if the government has already filed a notice of federal tax lien against you. Okay, so if you owe more than $25,000 and the IRS has filed a notice of federal tax lien against you, right, making the public aware in your state or county records of your tax debt owed to the IRS, then the IRS will not withdraw that notice of federal tax lien, even if you enter into an installment agreement with them. Okay. However, thanks to the Fresh Start program, and the Fresh Start program isn't what you think it is. I made a whole video on the Fresh Start program. It's not what those advertisers on TV and radio are telling you it is. Okay, watch the video up at the top of your screen. It'll tell you what the Fresh Start program is. But thanks to the Fresh Start program, the IRS will generally withdraw a notice of federal tax lien against you if you do the following things. If you get your balance down below $25,000, okay, if you enter into a direct debit installment agreement with the IRS over 60 months, or if the C said your tax debt is going to drop off before 60 months up until that date, and then if you make 3 consecutive direct debit installment payments under that agreement, you can request that the IRS withdraw the notice of federal tax lien using Form 12277. So if you don't want the general public, right, especially lenders and others interested in your creditworthiness, right, aware of your tax debt, consider getting your tax debt below $25,000 and entering into a direct debit installment agreement with the IRS so that you can eliminate your tax lien. Okay, very important, right? If you're looking to refi, get cash out of your home, sell your home, right? Notice the federal tax lien is there. The IRS is going to get theirs, get paid out theirs before you get yours. You get into an installment agreement, like I mentioned. If your balance is below 25, you can continue to pay the IRS on that installment agreement. They'll remove the lien. Now, if the IRS hasn't yet filed a notice of federal tax lien against you, okay, and your IRS assessed balance is $50,000 or less, getting into an installment agreement to fully pay your tax debt with the IRS will generally preclude them filing a notice of federal tax lien against you. Okay, they still have the legal right, but right now it's their policy to not do that. Just FYI. Okay, see, there's these thresholds, right? $25,000, $50,000, et cetera, et cetera. If you owe the IRS more than $25,000, over $145 of interest is accruing on your IRS account at current rates. Okay, I'm just taking, right, the current IRS interest rate on underpayments is 7%, right? So just using simple interest, which isn't even accurate because IRS interest compounds daily, $25,000 times 7%, that's $1,750 of annual interest divided by 12, $145 monthly. Okay, so if you owe more than $25,000, it's going to be a lot more than $145, but at $25,000, over $145 of interest, IRS interest is accruing on your account every month at current interest rates. And at least $125 of penalties are accruing on your IRS account every month, assuming the penalties haven't maxed out. IRS charges a failure to pay penalty. It is 0.5% a month of your balance, up to a maximum of 25%. So $25,000 times 0.5% a month, that's $125 a month, right? Obviously, again, just like with interest, if you owe way more than $25,000, it's going to be more than $125. But at a minimum, you're looking at $125 in penalties accruing on your IRS account every month. However, when we get folks into installment agreements with the IRS, we're able to cut that future penalty rate in half. Okay, just FYI. Number 6, you will know once you owe the IRS more than $25,000, and this is for you folks who have business tax debt with the IRS, like unpaid payroll obligations, for example. Once you owe more than $25,000, you will no longer be eligible for an in-business trust fund express installment agreement. This is a special kind of installment agreement that the IRS will grant to businesses without requiring to submit a financial statement or other kind of financial verification. Okay. You lose that privilege once your business owes more than $25,000 to the IRS. Speaking of payroll taxes, if you owe more than $25,000 in payroll taxes to the IRS, a revenue officer is more likely to be assigned to your case, right? So if you owe a bit over $25,000 in payroll taxes, you don't want to deal with the nightmare that a revenue officer can be, I recommend you get that balance below $25,000 as quickly as possible and get yourself into an in-business trust fund express installment agreement that I mentioned a couple minutes ago. And finally, number 8, this is speculative, but I do believe that you are more at risk of wage garnishments and bank levies if you owe more than $25,000 as opposed to if you owe $25,000 or less. And this is kind of just piecing all the other 7 points together, right? This is a bit more speculative. I can't point to any part of the Internal Revenue Manual that explicitly says this, but the reason that I believe this is because clearly the IRS views $25,000 of tax debt as a certain threshold for taxpayers, right? It's the threshold over which you lose certain installment agreement payment options, right, in a streamlined installment agreement. It's the threshold at which you are stuck with a notice of federal tax lien if there's an existing federal tax lien, right, even if you get into an installment agreement with the IRS on your debt. Okay, so there's clearly significance to the IRS of the $25,000 figure, okay? And I believe that it follows, and this is based on my experience as a tax relief CPA as well, I believe that it follows that as a result of owing the IRS more than $25,000, you are a higher priority to them in terms of collections as someone who owes $25,000 or less. Okay, this is not explicit. This is not something I could point to, chapter and verse in the Internal Revenue Manual and say, hey, there it is. But just kind of all things considered, it seems that the IRS views $25,000, more than $25,000 as a kind of a threshold. Are you necessarily as high a priority as someone who owes $100,000 or $1 million or $2 million or whatever? No, not necessarily. But while the IRS may not ever take collection activity against someone who owes them, like, say, $5,000, I believe you are at obviously a far greater risk of forced collection activity if you owe more than $25,000. And I would even gander that if you owe more than $25,000 versus, say, only $20,000, I believe that chasm is greater than the difference between someone who owes like $20,000 and $15,000, right? Because I believe this $25,000 is kind of a threshold that $20,000 isn't. Okay, speculative. But this kind of it makes sense and it bears out in my own experience. So what should you do if you owe the IRS more than $25,000? What should you do? Well, you do have options. You could obviously pay off what you owe. Okay, go take out a loan or something, pay it off. But barring that possibility, and you aren't in hardship, right? It's like you can't afford to pay this debt off. Then it might make sense for you to get that balance below $25,000. Or maybe even if not, maybe if you're not even planning on getting a resolution right now, okay? Kind of want to wait it out. Take your chances, so to speak. You probably want to get that balance below $25,000 if you can, right? Because as I've described in this video, the IRS appears to take special notice of and deny some privileges to taxpayers who owe them more than $25,000, okay? So if you can get your balance down to $25,000 or below, I'd recommend doing that. Second thing, obviously, is if you can afford to pay the IRS something every month, get into an installment agreement with them, okay? That's pretty obvious, right? Yes, the IRS really wants their money now, but second best thing to get it now is getting the money over time. Third thing, okay, if you can't afford to pay what you owe, you truly can't afford to pay what you owe. You don't have access to, say, equity in your home that you can, get cash out of your home and you can pay what you owe. That's off the table for you. Okay, look into tax relief, and this is what we do for folks at Choice Tax Relief. Okay, if paying your balance in full, even over several months or years, in an installment agreement will cause you financial hardship, consider tax relief options like the offer in compromise. This is an agreement with the IRS to settle your tax debt for less than you owe. Video about offers and compromise at the top of the screen. I have several videos on my channel about offers and compromise. Just go on my profile and scroll down that whole playlist of offer and compromise videos. Okay. Second thing, partial payment installment agreement. Okay. This is an agreement with the IRS to pay less than you owe over time. Offer and compromise, depending on the type you pursue, you got to pay that, whatever your offer amount is, within 5 months or 24 months. Okay. Typically, if you go 24 months, you're going to have to owe a little bit more on the offer. I go over this on my offer and compromise guidelines formula video. Anyway, partial payment installment agreement, what you're doing is just saying, hey, IRS, I cannot afford to pay you all this. I'm going to pay you a little bit every month, and you're going to keep paying that amount until the tax debt drops off on its CSET, collection statute expiration date. Don't know what that is? Watch my video on the IRS statute limitations on collections. Link to that video at the top of your screen. Okay. Now, keep in mind, right, that with the partial payment installment agreement, you will have to prove this to the IRS, right, that this is all you can afford to pay. Look up Form 433F. Call them, fill out that form, call them up, right? They're probably going to ask for bank statements, pay stubs, things like that. They will probably file notice of federal tax lien against you to protect your interests, but that is an option available to you if you truly can't afford to pay the IRS everything. There's also currently non-collectible status. This is a special hardship status with the IRS, wherein you don't have to pay the IRS anything, okay? They can take another look at your situation, right? If you get in CNC, currently non-collectible, same thing with PPIAs. And if they believe your financial situation has improved, they could potentially kick you out of CNC, right? And then you have to prove to them that, oh, no, I'm still in a hardship by submitting new financials, right? But if you're in CNC, that statute of limitation on collections keep running. So theoretically, if you stay in CNC until your tax debt drops off, then you never have to pay them a dime. But they will file notice of federal tax lien against you if you get into CNC. I have a whole video about CNC as well. Link to that video at the top of the screen and in the description below. And I have other tax relief videos available to you, whether you owe more than $25,000, $25,000 or less. You can check out my tax relief videos here on the left-hand side of the screen. If you would like a free consultation about your tax debt, give us a call at Choice Tax Relief, 866-8000-TAX. That's 866-8000-829. You can also fill out the form at choicetaxrelief.com requesting more information. All right, folks, thank you so much for watching, and I'll see you in the next video. Bye-bye.